Good morning everyone and welcome to my morning report analysis videos on Thursday 21st of February with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly mixed start to the session today. Nothing too significant in terms of direction on across the Forex majors, certainly on the G4 majors anyway. Slight bit of weakness on the euro, slight bit of gains on the sterling and yen. There has been a bit of a move against the dollar, against the move higher on the dollar, I should say, overnight in the wake of the Fed minutes. Now, the Fed minutes suggested that the economy for the US was pretty strong. It's looking at external factors for reason why it sort of took its foot off the pedal, but it just suggested that I suppose there is the potential that if the global economy does start to pick up a little bit, then the prospect of further hikes is still on the table. And what we have seen is a strengthening of yields. Yields are higher. Yields picked up on the 10-year and the 2-year, and that has certainly helped the dollar to pick up today. And you can see that whereby, say for example, through gold has started to turn back a bit. This strengthening dollar has just sort of picked through the gold price there, and you can see that through the commodity charts, the commodity majors as well. The Canadian dollar weaker, Aussie dollar and Kiwi dollar very much weaker. Now the Aussie actually held ground this morning on a better than expected, or certainly a solid employment report for the Australian economy, but there were suggestions that Westpac, one of the big banks in Australia, were sort of fairly negative in their assessment on potential rate hikes going forward and the path of tightening. So it was a negative for the negative for the Australian dollar this morning, and that seems to have come through. Now, in terms of equity markets, fairly stable actually. Look at the fact that the S&P 500 closed marginally higher, and again is still a little bit higher on the futures. The Asian markets were fairly sort of solid, fairly stable. And you can see that reflected through the fact that the DAX and the CAC are a little bit mixed, but the FTSE 100 is the big underperformer today, so watch out for that. Could be a little bit of a link to sterling strength in that one. But broadly speaking, we are fairly steady and nothing too doing. This actually is a fairly large amount of economic data today. We've had the Eurozone flash PMIs out this morning, and they're actually fairly encouraging. A little bit negative on the manufacturing, but services was much better than expected, and that has helped to. Sorry, where is it? The 9 o'clock Eurozone. There you go. Services. So manufacturing worse than expected, but services better than expected, and that's helped to drag the composite PMI to 51.4, so up from 50.7 last month, and better than expected there. And it's encouraging, I would say, more than anything, rather than sort of going all out positive. Now the sterling has been supported also by the fact that we've had better than expected tax receipts by the government in January. January is a big tax clawback month, and we had better than expected numbers there for sterling. We've also got in the afternoon we've got durable goods for the States plus 0.3% on the ex-transport. That's the core data there. Weekly jobs claims 229,000, so there or thereabouts. And the flash PMIs for the States. Now, this is going to be interesting this afternoon, how it affects the dollar. Expected to tick a mild bit lower on the manufacturing and a mild bit higher on services, so let's see how that goes. Existing home sales expected to be there or thereabouts where it was last month, 5.00 million units there. And weekly crude stocks, another build of 3 million barrels, distillates 2 million negative, and gasoline 1 million negative. So that takes me to my chart of the day. Silver. Now, silver, as I said, the dollar has strengthened, so silver and gold have come back a bit. But it's interesting what we've seen in recent days is this recovery in both silver and gold. Gold broke out above the 1326. Silver sort of failed at 1618 again, and 21 actually the other day, but basically failed at that resistance yesterday into the close, and it's sort of come back a little bit today. It's over 1% lower today. Now, this little correction I think could well be a chance to buy on silver. You've got a redrawn uptrend, comes in at 1560 area, but it certainly looks as though that the medium-term configuration on silver is still positive. So this little correction looks like it could be a chance to buy. You've got the MACD lines, which on the brink of possibly turning higher. MACD line, RSI still above 50, stochastics still positive. So I think weakness is a chance to buy on silver, and I think that given the fact that gold broke out, I think silver is likely to continue to also make gains to the upside as well. You've seen this little correction today back into a bulk of support, sort of 1580, 1570 to 1585 is a band of support initially on the silver chart. Now, obviously, the key support is 1545. You definitely wouldn't want silver to go below that. But certainly that reaction low from what's that, Tuesday now, 1569, it gives a basis of support around this sort of level. So I think this little correction could well be a chance to buy. We've got to move back into that sort of near-term pivot at 1587 as well to consider. So is this a buying opportunity, I might question. So I wish you good luck in your trading today, and I will speak to you later.